Senior Consultant. Thank you for joining us for this workshop on cyber insurance. This is not the first workshop. We had an earlier workshop in DSCI Best Practices Meet in Bangalore in month of July, and where we discussed on cyber insurance and the actuarial science that goes behind it, how the companies determine the insurance premiums and how do the organizations in different sectors looking to adopt this stuff. So we thought, so it was a pretty good discussion, and we thought we'll carry forward the discussions here today also. And that's why we got in touch with one of our friends, Manoj, who now works with Aon Global Insurance Brokers, and they have kindly, graciously agreed to sponsor this workshop for you all, benefit for all, so that everyone learns about the aspects of cyber insurance, its adoption in various geographies and in various regions, and what are the various sectors, how they are looking at cyber insurance in different aspects. And for that we have a pretty comprehensive description and coverage of what we are going to do here. It's also there on our website and the cyber, or in our conference handbook agenda page. So cyber insurance, if you look at it, it's I'll read the actual definition for you. So cyber insurance is an insurance product used to protect businesses and individual users from internet-based risks, and more generally from risks related to information technology, infrastructure and activities. I'm not sure it's a legal definition, but it's a one on Wikipedia that I used. And cyber liability insurance cover, also known as CLIC without a K, it is often used to describe a range of covers in very much the same way that the word cyber is used to describe a broad range of information security related tools, processes and services. So the insurance cover that covers all the aspects related to cyber is what we are going to discuss here. So how we'll initiate is that we'll have all the panel members seated on the dais, and then I'll ask Manoj, who is the Senior Vice President with Aon Global, to give us a short presentation. So he has all those data points and stats that will start the discussions on the subject. So to welcome, I'll welcome Mr. Manoj AS, Senior Vice President Aon, to please come on the panel. Please be seated. Mr. Sushant Sarin, Senior Vice President of Tata AIG. Mr. Deepak Rajgopaul, who is Associate Director with KPMG, and he leads the cyber insurance practice there. And Mr. Suhaan Mukerji, who is Partner for PLR Chambers and is one of the leading eminent lawyers that DSA also engages with for a lot many issues. So to initiate the discussion, I think we'll straight away start with the presentation. Manoj, your presentation? Yeah, all right, so, okay.
Thank you, Rahul. So good afternoon, everyone. It's a privilege to speak under the aegis of NASSCOM. As Rahul mentioned last time, which we had a discussion on this cyber liability insurance in Bangalore session. It evinces lots of interest, and which we are carrying forward here. So what is this cyber risk? And what is how it is perceived, and what is the reality? So I'm just going to, before the panel discussion, some of the research with respect to the Indian corporates. And this is one of the foremost studies which every year FICCI does in India. And last year it was done along with the Pinkerton. They have identified the risk, the top risk Indian corporates are exposed to. And they have plotted those risks on a scale of 0 to 15, 15 being the highest. In 2014, cyber risk was plotted as number 5, and in 2015, cyber risk is plotted as number 2. That means in 12 months' time, it climbed to 3 positions. And if you see the first risk, which is a corruption and other business interruption risk. So that is the importance globally. Every forum, if you look into it, World Economic Forum or Lloyd's risk studies, one of the top 5 risk exposures, which is a cyber risk, which is really perceived, and today which you see the real exposure lies, because every day newspaper which you would be seeing 1 or 2 news item. Last week, two Bangalore IT giants were exposed to a cyber breach. And if you actually look into the cyber breach, actually the victims were the US technology giant and a pharmaceutical giant. And the target was 2 Indian IT companies. So now we have come to the conclusion that, look, Indian IT companies are exposed to this vulnerability because the victims might be their customers, but they will become the target. And obviously that exposes their balance sheet to a huge amount of cyber liability. The second study, which is a KPMG study which they have done, among the Indian 250 large corporates, 94% of the corporates, the CISOs and the CFOs, have confirmed they are exposed to the cyber exposure. And some of the results of this study, if you look into it, the companies are not prepared to face this exposure. They don't even have a security defense in place, proper security defense in place. They are not prepared for an incident response or crisis management kind of situation. So it shows that, look, the exposure is there, which is real, but the Indian companies are not prepared. And even if you look into their security spend, out of their total IT spend, which is less than 5%. So this is another study which was done by Sushant along with Mahindra. This shows that, look, the number of crimes in 2015, which is almost double the number of IT crimes in 2014. And if you look into 2011 to 2015, it is the CAGR rate is 107%. So the exposure, which is again, it shows that, look, it is a real exposure which is growing at a more than 100% rate. And this is a very important study which IBM has done globally, and they have taken India into consideration as far as the cost of the data breach is concerned. And per record cost, the average global cost is say $154. In India, it is $56. If you look into, they have done even INR reporting which they have done, per record breach in India, which leads to around 3,400 rupees loss. And on an average, Indian companies for per data incident breach, which they are spending close to 8 crore. It's a huge amount, which there is the corporates can mitigate to a large extent through risk transfer mechanisms and the preparedness, the cyber defense preparedness. So again, if you look into it per industry, which are the industries? In India, the highest payout, which is a IT industry, which they are spending close to $60 per record breach. Second one is financial institutions. Globally, it is healthcare companies and then financial institution, which you see the IT company spend is close to $127 per record breach. In India, it is IT companies at this point of time, their per record breach cost is very high compared to the other industries in India. So I just wanted to set the premise. On this premise, which we will be opening up the panel discussion. So all these studies which are related to the Indian risk and which is done among the Indian corporates, which shows very clearly that, look, this risk is not a perception, which is actually it is a real risk, which every day the corporates are facing it. So thanks a lot. With this, which we will open up the panel discussion.
Thank you, Manoj. And I think by next year, we'll have some surveys from DSCI to also quote the stats with on cyber insurance aspects. So, to start the context, I think it would be useful if we draw an overall architecture for the audience on what is the overall structure for cyber insurance. what role each and every entity has to play, be it the insurance or the reinsurance like Aon Global, insurance companies like Tata AIG, risk service assessment providers like KPMG and Big Fours, etc., and the legal partners like PLR, etc. So I would like to ask you, each and everyone, to please explain briefly for 5 minutes what role has your entity got to play in this overall aspect.
Yeah, if you look into the market structure, which is a big ecosystem, which is a supplier is there, they are the underwriters, then there are distributors, that is the brokers or other distributing agencies which you would be seeing. Then there is a huge service infrastructure. The service infrastructure consists of forensic guys, public relations agency, the lawyers who will be playing a major role, then the experts, the discovery experts, the restoration of data. This consists of the market infrastructure. So I'll just ask Deepak to add, because Deepak is coming from the KPMG, the consultancy, they play a major role in the pre-contracting session and during the contracting and post also incident basis, which they play a major role.
Thanks, Manoj. So I won't talk specifically about what KPMG does. What I would like to say is from an advisor's perspective, what we do with corporates. I'm assuming the base foundation that there are corporates and there are insurance companies involved in this, right? So we play a role where we work with corporates, right? So I'm not talking we as in KPMG, but we as in advisors of various nature, various companies. They typically help companies first do the preventive steps, right, to prevent a cyber incident from occurring, right? So there's a lot of technology, there's a lot of people-related activities, processes-related activities, all of that which we do, right? Then we do the response, right? So there's both resilience and response once the incident occurs. So there are a whole set of activities related to that, right? And the last one is any residual risk after these two, right, is where we connect with the insurance companies, right? And we form a sort of a bridge, right, where we help insurance companies understand how the entire cyber ecosystem of that entity exists, right? So what are the steps that they have already in place? What is the kind of residual risk that they are looking to insure? And from the insurance side, we have experts who are able to talk their language and come out with saying what kind of assessments do the underwriters need as inputs, right, to come out with a quote on what kind of coverage they do and what kind of premium do. So under that broad gamut, advisors, including KPMG, are involved in this. Right, I will pass it on to Sushant to talk about how the insurers look at this.
So the fact that we are all gathered here, we understand that the risk of cyber breach is happening is very real. And experience has shown that with all the technology that we employ, breaches do happen. You need to transfer the risk of a breach happening and the financial implications, and Manoj very briefly touched upon the cost of each record being breached in India being about $54 and the average being about 8 crores for, in terms of a breach for an Indian company. So that risk of running a loss of 8 crores any day, any time, you would want that to be transferred. Who do you transfer it to? You transfer it to the insurer. So I represent here Tata AIG as an insurer and will speak on behalf of the insurers. We work with the client, we work with the clients, their consultants, their brokers and lawyers, all the entire ecosystem to make sure that the risk that you are running is taken care of at your end as best as it can from a technology, people, practice perspective, and what is left is transferred. And should you have a loss, that risk transfer mechanism actually works for you and that loss is paid back to you. So within the ecosystem, within the larger ecosystem, there's a role which is played by lawyers and law firms in two ways. One is shaping the law and the other is looking at a contract and what are the rights and obligations of parties to a contract. So for that, Suhaan is the best person to speak.
Thanks, Sushant. So essentially when as lawyers, the role in something like this is the first piece is to understand what is your statutory risks that you have. in terms of payouts that you may be liable for if a cyber incident were to occur. The second piece is to look at going into the contracts that you may have with third parties or with other vendors, etc., or people from whom you're taking data. Interestingly, the US, for example, is reconfiguring their legal framework to make it easier for people who are Americans and their identities are stolen or any of their data is breached to be able to catch people overseas and to sue people overseas. And I think in that sense, since a lot of back-ending is done out of India, I think legal changes in other countries do impact the way we do business here. And so you may be a company that actually receives data to be processed for some client sitting outside, and you may never have thought of this as you having to protect yourself from a cyber incident claim coming out of the US. And so it's about first figuring out the statutory framework that you're governed by. I mean, the IT Act is very, very clear also on what you're liable for when you have a data breach. You have also guidelines in terms of policies and procedures that you need to have as a bare minimum. I think that's obviously something that's going to be assessed by any insurance company whom you're potentially looking at buying coverage from. So since liability has a legal framework around it, lawyers are always pulled in to figure this out. And I think the interplay between technology and law is a bit of a minefield, and for both insurers as well as the person who's getting insured to be able to assign the liabilities in such a framework as to how the law would be applied to a particular situation, whether it's a policy or a technology architecture, is something that people require assistance from folks like us. Yeah.
Thank you, Suhaan. So, Suhaan, if you look at the drivers for the cyber insurance adoption in major geographies, so let's say US, it's majorly because of the data breach notification laws in 46 out of 50 states that they have, which is not the same case with Europe. Europe does not have a data breach notification requirement, and same is the case with India. We do not have data breach notification requirement. Although certain mandates that you send the information to certain, but I don't think it's very religiously followed by the organizations. So what are the regulatory drivers in the current context that you see that can drive the cyber insurance support?
So I think the biggest regulatory driver is that if you look at the listing agreements now, the board has a very clear responsibility as far as data protection is, I mean, one is the stock exchanges and the listing agreements there. SEBI has also come out with a framework. Looking at integrity of data is now one of the cornerstones of corporate governance. So there is a driver in terms of making the people at the top being responsible. You'll also see that more and more companies have actually set up CISO positions in their companies, and generally you find the CISO reporting into either the head of legal or the CFO. So the importance of data breaches as a commodity and as an asset has been recognized there, and I don't see that we will not find situations where data breaches have occurred, and now that you have class action suits possible under the Companies Act, classes of consumers perhaps coming back and suing companies for that. And I think it's a good way for risk management by a corporation to be able to do that, and build it in as part of a corporate governance perspective, given whatever the issues that there are. In fact, one of the legal issues that I've been trying to figure out is in case there's a claim that gets contested, will not conforming to certain breach notification under the intermediary guidelines, whether that would become a way in which someone walks away from saying that I will not actually recognize this, because it's pretty much like, say, an insurance framework in the nuclear sector. Now, can I claim in can I claim under my coverage if, say, for example, the government doesn't declare something as a nuclear incident? Now that's an administrative process. So how do we actually structure out whether there will be, how do we determine whether a crime or a fact of a cyber crime or a data breach actually having occurred, and the steps that and procedures that you will have for that.
Thank you. Manoj wants to.
So if you look into it, there are 4 pillars where we are seeing the demand which is coming in. The first one is in the IT space, if you look into it, which is a contractual mandate, which is coming from the US companies, US customers and the European Union customers are asking Indian IT companies to maintain the cyber insurance policy separately. That is, they can't avoid, because for the business which they have to maintain this policy. The second one which we see is the targeted attacks, which the board is much worried, because this is not a server room issue. Because as a part of the corporate governance, there will be a huge fallout if there is a large liability on the balance sheet, which is the stock price will get plummeted down, and they will be answerable. So that is one thing, and supported with lots of regulations. Even if look into the Companies Act 2013, because the responsibility is on the board to have a security frameworks for all the exposure. The first one which I just want to talk about, the piece on the regulation side, which is a regulation and the recommendations. Because if you look into RBI committee, which has strongly recommended about a framework for the security aspects, the cyber security aspects for the banks, and there is a recommendation, even if it is not mandatory recommendation, there is a recommendation to transfer the risk. And if they don't transfer the risk, what happens is it is an operational risk, which will be having a bearing on their capital structure. So that is also which is there. So if you put all these things together and along with the real exposure every day which the corporates are facing, so there is a huge demand from each sector depending upon the thrust on these vectors which you would be finding.
Sushant wanted to add something?
No, Manoj has covered the point on contractual mandates really driving the purchase of this insurance. That's the way this cyber liability insurance is taken off. And the fact is, if you look at the Indian IT industry, and everybody sitting here is somewhere or the other very closely connected to the IT ES work. We are all processing data, and if there are laws in the US which let's say make a bank or a hospital or a pharmaceutical company responsible for a data breach, and you are the one who's processing the data on behalf of that bank, if the bank is visited with financial consequences, they are going to go after you and say, because of your negligence, because of a data breach that happened at your end, we are suffering a financial loss, not to mention a reputational injury and all of that. Therefore, they mandate that you have insurance, and I think it is also very intuitive that if you are running that kind of risk, you better have insurance even if it was not mandated. So just that point.
Even the section 43A, which was introduced in into IT Act after this amendment, 2008 amendment, it is unlimited liability. The civil liability is unlimited. So even in Indian territory, if there is a breach and you are found negligent, not complying with the reasonable security standards and practices laid down under the IT rules, so your civil liability is unlimited. Even there is a penal liability also under section 72A, which you would be penalized. But the civil liability is unlimited even in India under the regulation.
Right. So
I think the key is to look at whether the 5 crore limitation that's there is going to be applied separately for every breached record, or is it going to be in toto? Because and I think all of us have been trying to figure out that, because we've still not seen an actual case go all the way through on that, and I think that's going to have a tremendous implication. But I think another point to remember is that this is just beyond the IT industry as well, because data breach is for anyone. I mean, I think it can even go down to the individual in that sense, and I feel the uptake on this is more and more relevant for those who are not in the IT industry, because it's the contractual driver is a business necessity. So you will automatically be taking that as something for driving your business. But I think the question for all of you all sitting at the table as people who have policies like this and are offering this is, how do you take it beyond the IT industry? Because again, and in the IT industry, looking at how do you actually ensure that the IT industry starts saying that we will work with vendors, because actions of vendors very often are not covered in the contractual arrangement that you'll have between the prime data controller and whoever and the processor. And I think that's the interesting space or the business opportunity as well for everybody. I mean, everyone who opens a bank account could necessarily end up being someone who should take one.
Absolutely, and that's why the definition of cyber insurance, because it also covers the affected individuals. That's a very interesting point that you brought out. You also brought this point
yeah,
about.
But one thing is also going back to cyber incident. The key is, and I think I don't think enough attention has been given by people sitting around the table generally, whoever the stakeholder, as to when can that claim actually be made.
What would be the trigger for that claim?
What will be the trigger?
All right. So you have mentioned about the SEBI requirements and the Company Acts Amendment and how the organizations are and the senior members or the board members are increasingly becoming liable for the cyber attacks happening to their organizations. And a lot of organizations in the West, not particularly in India, they have board members with specific cyber security skill sets. For example, GE, Wells Fargo. And I think that is going to be the case well forward with all the other organizations and also in India, because it has become a very important board issue. Earlier it was the CISOs used to do half yearly or an annual reporting to the board on cybersecurity, but I think it's a very important topic that is getting actively discussed in all the board meetings that we know of at least. I think it's a very important. So now I would like to ask Deepak on. So what are the non-legal drivers that tend, what are non-legal drivers on why people use cyber insurance? Leave aside the legal aspects.
So primarily what drives people to move towards insurance is after they realize that they have invested. Most companies invest at some level on their cyber security, right? It can range from just having your basic IT security, and I'm being very clear to differentiate between cyber security and IT security here, right? Information security is just one part of your entire process. So you have standards which normally companies look to when they want to walk down this journey. They look at, say, ISO as a standard maybe, right? And they start aligning to that. They do vulnerability assessment, penetration testings, etc., right, to make sure that their network is secure, right? So these are standard processes that you see everywhere. And then come when they deal with customers, so they were mentioning about US regulations, HIPAA, PCI, all of these where you practice, right? So they have that. If you're working in defense, for example, a non-IT, ITES sector, FedRAMP, right? There are other requirements legally. So that's something which drives this, right? And then they start noticing that incidents are occurring. So we had a survey which was run, and Manoj is mentioning 94% of the 250 companies that we covered across sectors, right, thought about cybersecurity. 72% of them had an incident occur, right? So this is a reality, and therefore people start looking at the fact that there will be losses, and they have to insure themselves against those losses, right? So that is one of the reasons why they drive towards that. The people are, again, a significant reasons why things fail, right? Not only technology. So that is another reason why you say that even if you protect yourself with technology, right, there still could be incidents. And therefore, there is still that risk, and therefore you still have to go for insurance as a backup, right? So this is the kind of mentality which primarily drives. What I would love to hear is, Sushant and Manoj going and talking to customers, what kind of drivers, other than having a tick box in the checklist, do they get to hear, which tells them to go for an insurance product?
Yeah, Sushant, would you
want to take that? Yeah. So thanks, Deepak. So if you look into it, the cyber insurance, why people are buying, barring this legal part. The SME sector or the startup companies, if you look into it, the e-commerce companies, when they begin the operation, the biggest risk is wiping off their entire database or hitting completely the balance sheet. And they might not be having the infrastructure of an established company. By buying this insurance policy with a apt wording and aptly structured, service infrastructure, which they are actually getting a friend to support them when there is a crisis. That is which the brokers and the underwriters would be convincing about these companies, the startup companies or say the SME segment companies. The big companies, the tier 1 companies would be having a different agenda altogether. There, these visible brands are clearly the targets. So there we have seen that the average payout of an incident which happens in India is close to 8.8 crore. And I just give you some examples. The Sony PlayStation 2011 was the first attack, and second attack happened in 2014. 100 terabytes information was completely wiped out from the Sony organization. 4 movies which was not released, which they worked on and which they kept it in the soft room, were taken away. The total loss of, and some of the communications which is between the senior, the executives of the Sony, with reference to American president, some of the actors, leading actors, which were very, very damaging. Reputation, the company's reputation was at risk. So the total loss, the financial loss of Sony was close to $300 million only to meet the expenses. And Target, which they had an expense of $60 million. So if you take lessons from that for the tier 1 companies, if there is a breach, and which will be hitting the balance sheet very heavily. So this insurance policy, if they have sufficient limit, close to 70% of that cost which will be covered. What the leftover is the economic value of the data or the IP, that is the first party loss. That's where you lose the customer, or to acquire new customers to make up the loss, which is not covered at this point under the insurance policy. But every breach of 70% cost can be covered under the insurance policy. So that is the main driver for the tier 1 visible brands to have this insurance policy. The startups and SMEs, which I have told you, instead of creating the very expensive infrastructure, today morning we had meeting with a startup company which we were explaining that, look, instead of creating this heavy infrastructure, by buying this policy which they can easily access the infrastructure behind the insurers, or if they have a strong wording, which there is another possibility to select at their end itself, but they will be having the fund coming from these policies.
Thank you. And Sushant, would you like to complement this? Or?
I wouldn't really want to add to, why insurance policies are being bought and why has there been a greater than 100% spurt in the number of policies being bought, in the amount of insurance in terms of the limit of liability being bought. But I think we together would probably do well if we turn our attention to, so what does the policy actually do for somebody who buys it?
Yeah.
And what doesn't it do? Both parts are equally important. So if you want, we can kind of...
No, sure. So I think, so I'll begin with you. On, let's say if an organization has to do a scoping for its cyber insurance project or domain, so what all could be covered as part of it? So can you suggest on where does an organization begin? What does it start to think? What it wants to cover? What information, assets, infrastructure, what all do the organizations have in mind that they want to cover? Do you want to start?
Okay, so when we are talking of data breaches, the asset that any company wants to cover is the data that it has. So it could be a data processor or a data controller, but it has a lot of data. That data is personally sensitive, identifiable data, or it could be corporate information. It could be, for instance, information on the R&D that a pharmaceutical company has done on, it could be information about, let's say, your marketing spends, the territories where you are leaders, things like that. So that data may not be personally sensitive, identifiable information for individuals, but is equally of value. So the short point is that you're trying to cover, the asset that you're trying to cover over here is data. That data resides on your computer system. So your computer system is, again, everything that you use. It could be what you own in terms of hardware, firmware, etc. It could also be what you lease or rent, and you typically rely on clouds and other people who are doing this hosting for you. So all of that is your computer system. So data plus computer system plus connectivity, because all of your systems are talking to systems around the world globally, and therefore the connecting points are really the vulnerabilities or those gateways through which somebody would enter in and hack into your system and take away your data, or a disgruntled employee would use some such gateway which is connected to the outside world to air data which was otherwise confidential. So this is really what you're trying to protect. There's really nothing else. Ascribing a value to data is very difficult.
Yeah.
So rather than trying to assess what's the cost of a record or whatever, it's done in a reverse way. It is, so if a record were to get leaked or 100,000 records were to get leaked, what were the consequences that as a company we would have to face? What are the financial consequences that we would have to face? And then you you look at every consequence, put a financial number to it, an economic loss number, and then you add that up and say, therefore, I need to insure myself for this value. So as we go along, we'll probably discuss that. And
all right. So, and in that context, yeah.
Yeah, I mean, so when you're ascribing the finance, because reputation is very difficult to cover or anything, I mean, it's not covered in this. I was just wondering whether there is any play for, because as a balance sheet item, we very often factor in goodwill and ascribe a monetary value to that. Have you, in your experience, seen anyone wanting to, vis-a-vis, say, a cyber insurance or ascribe a particular loss to that goodwill amount, so that you can actually notionally extend the policy to reputation, in a sense? In either of your
I'll answer that. So it's a very important point. In fact, what's become more important for companies and any business today is the reputation that you have. You can weather a financial crisis, but it's difficult to weather reputational injury. So companies do have goodwill, and it might be capitalized, it might not be, but they do actually have goodwill, and they want that to be that goodwill to be secured or protected. It's difficult to ascribe a value to the goodwill that is lost, even when the goodwill sits in your balance sheet with a value against it. How do you figure out whether that value, let's say it was 100 crores, has got reduced by 10% or 20 or 30? Difficult to do that. And if it is difficult to measure it, how do you expect anybody to pay for it? It's difficult to measure. So the policy approaches it, the insurance contract approaches this in a different way. It says, if an incident has happened which is going to tell on your reputation, we will pay for the services of professionals who you employ to shore up your reputation or to ensure that it doesn't get tarnished. So you will employ, for instance, lawyers who will tell you what the law is and were you therefore compliant with the law. So if you stand up in public and say, I was compliant with the law when I got hacked, so that's a whole lot of positive thing, So you need lawyers, you need media consultants and public relation experts to frame that, the message that you want to give out in the right way to the public or to your customers, etc., etc. The message that goes to the regulators, you want that to go in a particular way. So the costs of all of these professionals, and you can have the best professionals employed for your crisis, that is what the policy pays. So it helps you actually maintain your reputation as much as possible. It doesn't, to the extent possible, the reputation doesn't get tarnished, and therefore the goodwill doesn't get diminished. Some goodwill will get diminished, we understand that, but because you can't, we pay for crisis services. You can't measure the loss of goodwill, so that's not.
Suhaan, I just want to take your point that, you were asking that, whether the brand value can be protected. Because the goodwill which you see in the balance sheet, which is an acquisition goodwill, which is a purchase consideration, because self-created goodwills won't come onto the balance sheet. So what actually you are asking whether the brand value can be protected. There is another insurance which takes care of the brand value. It is a death and disaster, which is any kind of a crisis event, which brings down the value of a corporate, which can be insured. There are markets in the overseas, which is a separate policy altogether. If you look into the cyber liability insurance, which has got 4 pillars of coverage. The first one takes care of the liability. including the media liability. So somebody's data is compromised from your custody, the customer brings a claim against you. So straight away there is a coverage. There is a website defacement which happens from Pakistan because it is not a very sophisticated attack. Anybody can do the website defacement which hurts, say, any kind of a public sentiment, which is bringing any kind of claim. That is a multimedia liability. So both parts will be covered. The second part is a remediation expense. Sushant was explaining that. Look, forensic services, notification service, monitoring service, restoration of data which is already lost. It is a huge amount of expense, which I told you the $100 per record, which you see is almost $51 are spent on the remediation expense, which can be covered completely, 100% coverage under the insurance policy. Then the most important piece, the third piece which is coming in, is the fines and penalties. Both regulatory fines and penalties as well as the association fines and penalties. If you look into it, if you are suppose any IT company which is supporting any kind of a payment card processing industry, there is a PCI DSS fines, which is a huge amount of fine which is there, which can be also covered under the policy. And today we have certain carriers which they are ready to take 100% fines and penalties coverage. If you're buying a $10 million policy, $10 million fines and penalties coverage. And the fourth one is the optional section, which is like there is a distributed denial of service attack and you are not able to do any business. There is a huge net profit loss which can be also protected. And we started with the 24 hours retention, the excess which is called. Now there are carriers which are ready to write for 3 hours excess, which makes a huge sense because if the business is down for 24 hours, you get a 21 hours net profit loss. Then there is a cyber extortion, ransomware. So if you see the botnet infections which happen, many a times people, even Sony, if you look into it, the malware was sitting in the system, in the network for almost 18 months, which was just identifying the data routes and identifying the files, and all the wipeout, 100 terabytes, happened over a week's time. So ransomware sits in your network and it blocks the systems for the authorized users, or taking over data and asking for a huge amount of ransom, which can be also covered under the insurance policy. So the 4 pillars squarely covers almost 70% of the exposure today, the financial exposure under this insurance policy.
I would just like to add to address your point on goodwill. This concept of goodwill coming in a balance sheet was based on certain factors that you calculate that this is the company's goodwill, right? With the way cyber insurance is evolving, right? So this morning or yesterday I was reading about an article where a UK-based insurance company has brought in something called, cyber bullying, right? They've got an insurance policy for people who get bullied or, generally harassed in a cyber manner, and they're covering it. So if a company can decide that this is the goodwill or reputation or on some basis, just like goodwill is calculated in the balance sheet, right? They can get themselves insured for it. Somebody would come up with a policy which could, meet their needs. At this point of time, in my limited knowledge, I don't know of any company which has such a policy, but theoretically it's possible. Yeah, it's definitely possible. It's absolutely possible. I can factor number of hits on my site coming down probably as one reason. I could say a loss of business is probably something which will reflect over a 6-month period. I will do an analysis and come and tell you. Right? You have to find the basis on which you will identify the loss, and then the insurance company will be willing to on all aspects of insurance. It comes down to whether you have identified how you define what your residual risk is, the amount, and for that, what insurance company is willing to support you in that loss if it occurs. So goodwill definitely should be one of those things which we'll eventually get to, but at this nascent stage probably still not, but definitely something that will happen in future.
Sure, thank you Deepak, and thank you Manoj for laying down the framework on which the cyber insurance market currently revolves. So Sushant, I would like to ask you, what is the typical scope that an organization looks to cover as part of its cyber insurance? And how do we make the anomalies as part of this? For example, let's say 0-day vulnerabilities or unknown devices and platforms being part of it. So how does it happen? So what kind of policies, insurance policies are being offered in the market to the organization to that aspect.
Okay. So I'll answer about the insurance policies being offered first, and then I'll tie it back to first day vulnerabilities and things like that. So how's the unknown taken care of by those policies? So I think Manoj explained.
And just the point that Manoj also mentioned on the ransomware part. Now all the ransomware things are happening, and people lock in your devices and networks, and you have to pay some ransom. So maybe
Right. So Manoj already, Manoj has explained very well what the policy covers. Probably a little bit of a repetition, but I think we can look at it in a few buckets and becomes easy to understand. So the first thing is, if you want to give it a name or a tag, data liability. So data liability is breach of data, which could be either personal data or corporate data. So the liability that you have to a third party because the third party's data has got out into the public domain because of something that you didn't do well or your negligence. So that is data liability. You could in turn be depending yourself on an outsourcing company who does a little bit or a lot of your work. Okay. And because you are depending on that outsourcing company to do your work, and if the data breach happens at that end, you might be held liable for that. So that's also included within this whole tag called tag of data liability. And so data liability is one, and there is within that also you will have things like data breach happening and malware getting planted, or somebody hacks in and steals the let me say your credit card records, also knows the expiry dates and passwords and things like that. So that is also data breach. So you have a collection of all those things, but with the underlying theme being, it is money that you owe to somebody else. It's a legal liability, a financial legal liability. That's one part. Then you have administrative obligations, which is where the regulators, the information commissioners of different countries and different laws, they step in and they say, you did not do what you were supposed to do, so we are holding you responsible for that. So you will have to present your case or defend yourself in front of the regulator. That's cost of defending yourself. It's a first party cost. It's not something that you owe to another. There's no liability there. And if the regulator holds you responsible despite your best defense and imposes a fine on you, that fine is also covered. So the second part that you cover is, one is all the liability arising from a data breach. The second is the administrative obligations that you have towards the information regulators. The third is your costs of response and reputation. So response is, again, as Manoj said, it's not something which we still have in India, though I believe the law will catch up, but notification to data subjects is very important. That is number one, and that's a very costly piece. The other is forensics. So if a data breach has happened and you're not even sure whether it has happened, but you want to employ the best security experts to actually check whether a data breach has happened. And if it has happened, what are the recommendations of the security expert to close that breach? So forensic costs are something that you incur. Again, it's a first party loss to you, which is the loss that the policy holder or the cost that the policy holder bears. That is covered under the policy, under the insurance policy. And then you have credit monitoring. So if the data has actually gone out, and this is personal sensitive information, you might want that to be monitored to ensure that it is not misused, particularly if it is financial in nature. So that's a big cost that also gets paid under the policy. On that, you also have then you move to the fourth bucket, which is the denial of service and things like that. If you have a network interruption because of somebody is hacked into your system and prevented you from doing what you're supposed to do, the loss of your net profit gets paid. And so those are the four elements. What you can also opt for is media liability if data has gone out and it's affecting somebody in terms of defamation, plagiarism or things like that. Everything that you associate with copyright, that is something that the policy pays. So that's a liability you would have towards another person. Then you can have extortion. Manoj mentioned that also. And so Manoj, what else am I missing? There's more in the policy. The policy just goes on and on. I mean,
Please read the offer documents carefully.
Because some of because we can see lots of genesis of policies in the market. So when you look into one genesis of product which says about only the data which is covered, there is another genesis of product which is coming which covers even the money security laws under the cyber, which and they are bringing in more kind of a crisis management services which is adding one or two like that. And one latest versions which you see that look, the goodwill was one of the ask from our co-panelists. See, property damage today, if you look into say most of the large manufacturing entities which their property policy might be having an exclusion that software hacking which leads to any kind of a property damage, which was a huge demand in the market. In 2013 Lloyd's came up with a solution, then AIG started, now many players are writing. So even the property damage can be covered under a cyber liability policy. This is a big development. And another one is the economic value of IP or the data, which have already market has started exploring how they can start looking into incorporating this under the existing cyber policies. So cyber policy which you are seeing huge revolution, which is a very niche product which has come into Indian market 2 years ago, but the global market might be say from 1998 which started writing the cyber exposure. But it is evolving, and lots of these revolutionary changes which you would be seeing in the coming days.
Thank you, Manoj. So we briefly touched upon the aspects and what are the coverage of cyber insurance policies that organizations and individuals choose to adopt. So Manoj, if I were to ask you, and I'm sorry that I'm asking you this question because you are the sponsors for the workshop, why do organizations opt for brokers, and what is the role of broker in this overall ecosystem of cyber insurance?
So broker is having the client's interest, topmost interest in their mind, keeping that interest which they would be using their expertise to create options for the clients. So which I told you, sir, some of the different kinds of customers have got the different kinds of needs in their minds. So if the SME customer who is looking into it, they would be looking into a cost competitive service infrastructure provider with the required coverage. But if you are looking into a tier 1 customer, they would be requiring the top-notch policy wording because they have got all the service partners at their disposal. What they want is the best wording which has got all the coverages, possible coverages in place. So here where the broker comes into play, the broker will look into the requirements of the customer, then they approach the market and finalize which market is suitable for that customer. And the broker is more of a consultant here to the customer and does not add any extra value to the extra cost to the customer at all, because interestingly the brokers are paid by the insurance companies, and sometimes obviously the brokers do take up the consultancy basis also. So first of all, creating options, keeping in customers' interest, topmost interest in mind, and bringing the market according to the requirement of the customer, and looking into the policy wordings and saying that look, this is the best, and bringing expertise on the table without adding any cost to the customer.
Thank you, Suhaan. I would like to ask you that what, in the current context, so why do we need a specialized or a dedicated cyber insurance policy for the organization? Are not the insurance policies that are used by the organization sufficient to cover cyber related aspects as well?
So I think, actually you should be asking them, not me on
from the legal point of view.
Yeah, but from the legal point of view, there actually isn't any difference as long as, if you're looking, I think what may happen is, say, when you're looking at M&A or investments, as part of due diligence, you may now ask, okay, do you have something that's, because it also depends on the risk factor of a cyber incident or a data breach to that particular company or sector, so say if I was in the payments business or if I was in the financial services business, places like that, or even to a degree in the medical space. I mean, anything where you're looking at a HIPAA, FISMA type of compliance framework applicable over here in India, and similar sectors, you would actually put this in as something that you would look for. Now, pardon? Yeah, I would like. Yeah,
I would want all of them. I started with Suhaan and
not qualified
Sushant
to
and
answer that in a
Deepak.
sense.
I would like to add to this point.
So see, information security process are very good, very important, right? But they are like probably the first step towards getting to what we now call, cyber as a topic and what it covers. So there are a lot of aspects to it, like, for example, what is the governance of the organization, right? And how do they look at such incidents? So the classic thing is, it's not a technology failure, it may be a technology failure, but the main impact for, say, the company which Manoj has been mentioning, Sony, was not about a technology failure which caused a loss. It was more of how reputation got impacted. It was more of how their vendor ecosystem, there are the people, distributors who buy the movies from them, right? How they got impacted by the fact that they could not release it or they were under threat. It was about their actors getting impacted. None of these are technology challenges, right? So the governance or the company's top management, right, need to really be in sync with what is the impact of cyber-related incidents, right? Then there is the legal and compliance, which is what was probably sent to Suhaan, but the concept is one of what kind of contracts you sign, right? When you're making a deal, do you just accept terms and conditions which actually impact your company later? What are the regulatory requirements that are required? So there's a whole aspect to that. And probably the most important aspect, and I'm taking for granted there is information security and operation process controls and all that in place. The most important thing is your people, right? The social aspect of it. So we have instances where people go out onto the net and ask a question that I am coding this right now, right? Here's the part of my code. Can you please answer how do I solve this problem, right? Now, this is a significant challenge. There are people who go and Twitter or Facebook links saying that I am currently in this client or I am currently in this location, giving away information about how the company is working, right? These are not going to be covered by your information security policy because it does not happen primarily on your assets. It's happening on somebody else's assets, their personal assets. You have BYOD, you have everything on the cloud. There are so many things that are impacting a company. Therefore, information security per se, which historically was secure the perimeter, right, and to some extent secure your company assets, right, is no more relevant. Therefore, that is how the evolution happens from information security to cyber security. What would be interesting to hear from Suhaan is, how does the government, or how do you lobby with the government to start looking at cyber as a need with information security as a base, like, maybe a bug bounty for identifying potential threats, maybe a cyber terrorism cell which would address and protect the community, right, the ecosystem, as much as, say, our army or our police does, right? What are the kind of things that can happen at an institutional level or a government level? That will be interesting.
Yeah, so government's actually doing a lot in trying to figure out an institutional response, in a sense, to looking at this. But if you look at it, government is primarily responsible for its own assets and critical infrastructure, in a sense. But critical infrastructure also, as far as some sectors, a lot of it is still within the government framework. So if you're looking at the power sector, it is primarily within the government. But if you're looking at the telco sector, the telco is primarily in the private sector. Now, I think the difficulty for government is that many people don't want to institute the costs and the procedures required to protect systems, and I think unfortunately over here we need, you require a statutory liability framework to be able to drive people to really behave in a certain manner. I mean, auto insurance is a very clear example. When you require it first time around when you buy your car, because the onus is on the distributor to make sure that that's there when you're looking at car registration, but it's never renewed. So I think as industry, what I would look at if you were approaching government or even consumers is to be able to put in a framework where you mandate this more and more. So if you look at the RBI's framework to the financial sector, if you're looking at SEBI's mandate, I think what's sort of implicit in the Companies Act, but actually fleshing that out in further detail coming in from the Ministry of Corporate Affairs, or maybe looking at a paper that says this is how you need to drive behavior and this is what you need to do. Because I think statutorily we are a cost conscious people, and the fact is, unless someone tells us that you have to do it, if it means expending a bit more money, if I can get away with it. See, the reason I can get up here and slap you is because I know I can get away with it. That's the reality. And you'll say that, okay, now 8 years are left there, so you'll stick for an apologies. But the fact is that unless there was swift justice coming in for someone who didn't do that, and you drive behavior, because insurance is driven like that. I mean, and we kind of look at risk from a fatalistic point of view, that you cannot actually control and manage for risk for various aspects of our life. I mean, so I think that gets progressively manifested in how institutions also behave. But government's thinking about it from a systems point of view. It hasn't looked at it from the perspective of financial prudence as yet, that this is something that we should encourage. And I was, in fact, just while we were coming up, I said that, I was just speaking to Sushant and I was saying that, I think it could be interesting to look at, should government actually look at taking critical infrastructure protection coverage, in a sense, So while we are working on the critical infrastructure protection frameworks, whether we should be actually factoring this in something that state governments and Government of India and others should be looking at.
I think government is, as Suhaan mentioned, I'll just add a few points, that government is looking to protect critical infrastructure, not just the one it owns and operates, but also from the private sector viewpoint, and that is why they have mandated certain guidelines that are coming out from NCIPC. And also that DIT has recently come out with a cloud accreditation framework that all the government departments and agencies have to mandatorily use if they were to avail cloud services, private cloud, not public cloud.
I mean,
So,
you could also
yeah.
look at it being put in as something as a reasonable security practice.
Practice, absolutely.
I mean, you could look at the IT ministry putting out as part of the rules under the IT Act, and so it becomes kind of compulsory. So you're kind of market making it.
Yeah, absolutely. I think that is going to be the way forward. Suhaan, I think if you remember in the draft privacy bill that was not tabled in the parliament, but there was a provision that there was a mandate for the companies to notify data breach, and not just to the regulator, but also they have to give it in the newspaper advertisement half page that they have been breached and stuff. So government did actually go that way, although I'm glad that they did not put the requirement of no newspaper in the privacy bill. Sushant, you would like to touch the aspects of what are the different trends in different sectors that you are seeing, let's say banking sector or an e-commerce sector or telecom sector, from a cloud, from the cyber insurance adoption viewpoint. Are organizations merely discussing, or have they gone like full throttle and bought the insurance policies for the entire critical infrastructure? Some insights on that?
So it's a process, and it's a process that's unfolding or developing very quickly. The first movers who bought the policies, who bought cyber insurance, were IT companies, ITES companies, and as we touched upon earlier, this was really contractually driven. Their customers, typically big banks, etc., would mandate it and they would buy it. So they were the first movers. Banks in India, the biggest, best, most well-known private sector banks have all bought cyber liability insurance because they have huge amounts of very sensitive financial customer data. So they've protected themselves. That's number two. Till now, if we were to look at the telecom companies have not been that proactive, despite the fact that TRAI has a regulation somewhere which makes them liable. I think the fine or penalty is 50 crores.
50 crores.
Right, 50 crores.
Per incident.
Per incident. And I mean, that ties back to the point that you were making. Would the regulator for information actually call it 5 crores per incident? So every record is an incident, or would it just say that all records in one, in one event are 5 crores? But despite that, telecom companies in India have been a little tardy in buying it. They are discussing, and maybe they will soon buy it. Similarly, companies who are, who anybody who has information which is, so today the trend is really, if I have information which is personal, identifiable information, then I buy. Companies have to wake up to the fact that they also process a lot of, or possess a lot of corporate information which is, equally of value, confidential corporate information which is of value. I think it's an evolving thing, and it'll go there.
All right. So, Manoj, would you like to add to the aspect of when an organization wants to buy cyber insurance? It typically approaches a broker, and then you lay for them before them the policies that are available in the market and try to, because every customer requirement is different within the same sector also. No two organizations would be the same because the kind of information they would carry and the kind of risk they are exposed to. So what is usually the process for organizations to adopt cyber insurance? Just a bit on that.
So if you look into the global cyber market, there are more than 50 carriers which are offering capacity with the different wordings. 50, I will say 25 variants wordings are there. So the global capacity today is close to 750 million to $1 billion. Whether it is sufficient, it is a big question mark, because if you look into the global FI majors, which they are looking close to say $7 billion, $8 billion kind of a limit, because those are the financial institutions exposure. In India, one institution which is looking to buy $1 billion cyber insurance. It's a Bombay-based company which they don't believe in 100 million, 200 million. So what first round what they have done is they have done a roadshow in one of the large insurance markets, which they understood that look, $300 million is the maximum capacity in that market. So obviously the broker in this case, what we will be doing is, we will be taking the client means the chief risk officer, CISO, to different markets. If you want to structure $1 billion capacity today, you need to have 3 markets coming together: the US market, London market, and the Singapore market, which they have to put together all these capacities together. That is a one part. So as a broker, what we do, depending upon the requirement of the customer, which we select, which are the markets which we have to approach. So for a small company, say that look, they are looking for $1 to $5 million, you don't have to do roadshows and all, because sufficient capacity in Indian market which is there. In India, you can easily structure a $75 million cyber liability policy today. So, and the variants, which I told you, the wordings are the most important thing. And whether the new regulation which is going to come in, that is the use and file wordings, the brokers can freely recommend some of the wordings which are not filed by the insurance company to offer readily to the customers. So in the US or the matured markets, which you see that look, in some of the critical policies like the $1 billion policy which I told you, a manuscripting of wording is possible with this new regulation in place. The lawyers can sit together along with the insurance companies and draft the wordings according to their requirement, and which they can use it, and later on the insurance companies can file it. So the brokers create options on capacity depending on the wordings and the markets, and the service infrastructure, which I already told you that look, if that is what the important requirement of the customer, the insurance companies who have got a service infrastructure will be the top choice. They might not be interested in getting the best wordings there. They need only the required wordings, and the service infrastructure is the most important point. So broker's job is to create options for the client depending upon the client's requirement.
And Deepak, at what stage do organizations like yours are plugged into the overall ecosystem?
So we typically start when the company starts thinking about, if insurance is the trigger, and we'll stick to that other than the other security work we do. When they start thinking of insurance, they first want to identify the residual risk, right? So it starts off with the risk assessment, right? And the difference between the information security risk assessment and the cyber security risk assessment is that here the risk assessment is more of a maturity assessment first up, to say where is the organization, especially in terms of its people, its governance, its policies, in terms of how does it contract with its customers, right, the legal and compliance aspects of it, how does it address its people's need of being on social media or having flexible HR policies like bringing in your own devices, etc. Those are the kind of factors that you over and above your standard information security policy and its trainings and related stuff that we look at. Now, once we do that and help the customer identify what the preventive steps that they need to take in terms of preventing an event, we then talk about how do they respond to an event when it happens, how do they protect their brand, how do they do forensic activities with the current event, and then how do they help enable communications. All of that is part of the brand protection, cyber resilience aspects of the engagement. The last bit of it is where we help them identify, so what is that amount, financial amount, which you want to go and insure for, and then we start talking to broker companies, right, where we partner with them, or we partner with insurance companies directly and provide them reports based on which they make certain calls. So this is broadly the field in which any consultant team can
Thank you, Deepak. And you mentioned the point.
Dual risk, which you insure for.
Right, okay.
Because you could compensate for bring your own device type of thing with access control, So the key thing that I feel the insurance company would look at is, do you have access control as part of your policy,
Right.
And whether you are also doing a screening the moment you log in with your device as to whether there is malware coming in there. And those type of practices is what I think would actually determine, maybe premiums, or I don't think you can be as absolute as saying that, okay, BYOD will be this slab of, increase in what your premium would be,
So, what is the role of, Sushant, maybe you would like to add, what is the role of actuarials? What signs come into play when you are trying to determine the economic value of loss of data? What sort of signs that comes into play?
Okay, so I'll just add a point to the previous thing. See, insurance companies and in the insurance industry has to work along with the evolution of technology and the adoption of technology by consumers. It cannot act like a roadblock and say, this technology is dangerous, therefore don't adopt it. That will never happen. And so insurance companies work. So BYOD, if it is a thing which is now popular, it is a thing which is now popular. We have to find ways, along with the, people who are addressing the technology concerns of, so what's the risk and how do we cover it? So that's one part. That's on the previous point. And now coming to how, so the valuation. So, actuaries come into play when there are large numbers. Okay, so you have enough data points running into at least millions to be able to model and say that, look, if this incident were to repeat, this is the cost of that would come out. If you do not have that many data points, actuaries don't really come into play. Cyber risk is fairly new, and cyber incidents, though they are happening with very, very increasing regularity, and the numbers are going up and all of that, yet they are not still big enough and well collated enough for an actuary to work on them. So underwriters step in. What do underwriters do? Underwriters they look at what is happening, what are the consequences of data breaches in terms of the economic losses that are caused. Then they sit with the, within an insurance company, the underwriters sit with the people who draft the contract and come out with, okay, so if these are the consequences of a data breach, then which of those consequences are measurable in terms of money, and therefore which of those would we like to cover? So that's the second step. So an insurance policy gets formed in that way. And the third is to put a price to it. So that again is kind of at the start an estimate. If I have to, if I sell a policy to a pool of 1,000 customers, how many of them will have a data breach? What will be the financial outcome of all of those data breaches put together? From my 1,000 customers, can I collect at least enough premium to pay those 100 data breaches if 100 out of 1,000 were to have a data breach? So that's what the underwriters then do and put a price to it, and then that price goes out in the market. If you've gone wrong on your estimate of being able to sell 1,000, you lose in terms of you are unable to sell 1,000, but if you've gone wrong in estimating that 10% of the policies will lead to a loss, again you lose. So that's an estimate, not really actuarial, but more underwriting.
So as far as the cyber pricing is concerned, 2014, after lots of incidents in the US, there was a perception that, look, the market is going to get hardened. But the moment that this perception got, lots of heat, one market mentioned that, look, we are going to enter into the cyber market. That market is Berkshire Hathaway. So the moment Berkshire told that, look, we are going to get into the cyber market, every market fell in their place, because this market has got a capacity like $1 billion, $2 billion. When they say entering into the market means capacity which they provide $1 billion to any market. So it's a huge demand supply game is there in this insurance. The actuarial pricing which will set the bottom levels, but mainly, largely, the price is driven by how much supply is there in the market. Which I told you that, look, today you have a capacity from the 50 players, it is close to 750 million to $1 billion. So Berkshire is entering into the market, straight away it is taken, the excess capacity which is taken to another $1 billion. So when Berkshire enters into any insurance market, that is the barometer, many markets will follow. Today you have D&O markets, if you look into it, more than 1,000 established D&O markets are there. So there is a huge space for the supply. Once that supply comes in, at this point of time, cyber insurance premium is very high. So with this supply coming in, with the entry of Berkshire, the price will be slashed down heavily. And even though there are incidents, as Sushant rightly mentioned about, there are no enough data points for the actuaries to do the bottom pricing today. So all are waiting for. And during this phase, the large markets are going to give huge capacity, which will not allow the existing players to price it and play a game of their own.
And I have one question. Do you, we look at cyber insurance is currently limited to a data breach type of situation. Do you see the industry growing out into where you have an intermediary liability insurance at all, which is not data breach driven?
Yeah.
But it is for consequences of content and other things being uploaded. Do you see any shift in the industry to move beyond a data breach scenario? So because cyber insurance in a sense is basically a data breach insurance in a sense. But cyber liabilities can go beyond just data breaches.
So intermediary, if I have understood correctly, that look, these contractors or the vendors who are coming into the ecosystem, the business, or which are?
Let's say the social media organizations, let's say you upload some content that is not in compliance with the law of land. So do the cyber insurance cover those aspects as well?
The regulatory fines and penalties if there is a media liability because of social websites which the content is not edited by them, but they can't absolve from the legal liability. So obviously if they have got a media liability to a large extent, which will get covered under the media liability policy itself. So the intermediary part, I will
take it as a media liability.
It's a media liability as
Okay.
far as the social websites are concerned. So one more thing I just
if
want.
it's not a social website, see, intermediaries is going beyond
Yeah,
that.
yeah.
So,
Intermediary.
yeah.
That's what where I am coming. That look under the IT Act 2008 amendment, if you look into intermediary, which brings in all companies which who have got computers, which bring into the definition of intermediary. Here under the cyber policy, which has got some of the cyber policies which extend the definition to bring in all the intermediaries who are working with the insured. So that is one way which they protect it. So under the contract, the insured might be giving some kind of indemnities to their intermediary, stating that look, if there is any liability on you because of our actions, which we will be indemnifying you, that can be brought under the purview of the cyber liability policies. Intermediary on a standalone basis, which they can maintain cyber liability policy depending upon their professional services. If it is a service company, they can have a PI policy along with the multimedia liability. So various ways which they can mitigate the risk as a combination. So we have to see that look what exactly. There is no one solution fitting for all kinds of exposures. So depending upon the exposure, which we have to look into it, and we have to structure a risk transfer solution according to the requirement.
So Deepak, when it comes to the cyber insurance premiums that Manoj was just mentioning, from an Indian context in Indian legal scenario viewpoint, so what kind of controls or standard frameworks adoption would your organization recommend for organizations to adopt to bring down the premium?
Okay. To be clear, we do not advise people to bring down premium. What we do advise them, and in most cases we actually advise them to increase premium, right? The aim is to have a more accurate assessment of your residual risk. And then we take that to the insurance company and their underwriters come up with the premium values. So most consultants do not do this. It's an insurance company specialization to come up with the value of premium. What we do help them do is identify how that residual risk can come down by addressing the two steps before address that. First is prevention and then is response. Both of them will reduce your residual risk. And that's where we focus. We help them identify the residual risk, and then the premium call is taken by brokers and insurance companies. Right?
So, just to add to this point, so what role do standards adoption, let's say you have 27001 to 2013 certification, how does that help organizations to
right?
help
So
with the premium?
I'm not debunking any standard. Actually, that's my bread and butter, right? So I have a lot of respect for all the standards there. But let me just take a very small example. The ISO standard, as is read and can be interpreted depending on who your auditor is, for BCP, right, requires a basic policy to be in place, right, and basic organization structure to be in place, a document to be in place for that, right, all of that. Now, when actual incident, actual disaster occurs, and I've just come from Chennai, so all of you know what happened there, right? So we see a lot of companies actually go ahead and do things, right? If they haven't followed that, right, most of them are all, ISO certified companies, right? What we help them do is go beyond just the policies and procedures. It is a question of where is a loss possible, right? And if you're covering a certain kind of data, so it's not all data, it's not everything in the company. You address where the loss, what is the loss so identify the loss first, identify what are the assets related to that, or what are the people related to that, what are the processes related to that, and then how do you secure that? So that is a huge amount of work, which is where we help them. Post facto, the forensics, cyber resilience, all of that will kick in post facto, right? Where we work with lawyers, will come in and help. All of that will kick in then. And then, of course, tie-ups with, getting the insurance guys to talk to the things. Those are all, ancillary value adds that we do. So if I have relationships with people, I will obviously, look to engage with them and, get their value to the client, which is the value add I will get. Yeah.
If you really look into the underwriter's perspective, standard has got its own right. So see that, look, in the US, all the cyber underwriters are waiting for the NIST framework. Once the NIST framework is in place, because underwriters, those companies who are adhering to the NIST framework, substantially the premium will be reduced. Even in India, 2013, the National Cyber Policy Framework, which is there, which is nothing but it is a platform to collaborate, share your incidents and prepare your peer group, for such kinds of incidents and have the complete cyber security defense in place. So these kinds of frameworks and the standards, ISO 27001, has got its own merit, if you look into it.
But I think, Rahul, I think the standard piece, at least as far as the ISO thing is concerned, is just a process standard. So I think when you're looking at data breach and cyber, in a sense, you need to go beyond just the process framework standards that are there. I mean,
yeah, so I get a bunch. So my question was in a context of, let's say, when an organization has decided to take a cyber insurance, and so KPMG would help Tata, AIG and Aon to do the risk assessment and identify what are the risks associated. So what role do standards have there? When they identify that the organization has, best of practices and identified controls to required.
No, I agree with you there, but I would say that for an underwriter to look at it, I think they will have to go beyond the process, a standard which is just a process standard, If
I may just add, so not having 27001, see if we are talking ISO, versus having 27001, obviously having 27001 is a checkbox, okay, it's better. But having 27001 just as a manual and locked away in the safe, and nobody is practiced it, heard about it, and when disaster strikes, everybody is running helter-skelter. That is very bad. So actually you're better off having one than not having one, but you're much better off having one and practicing or implementing it on an everyday basis. So that's the trick with standards. Don't just kind of adopt them for the sake of certification, adopt them and then make them a part of your everyday business.
Right, thank you. And Sushant, also just to add, so would you also your policies would also cover incidents like insider threat or malicious acts by employees? Do you have specific policies pertaining to that as well?
So in the context of data breaches, a breach triggered by an employee is squarely covered. There are policies that respond to other kinds of malicious acts by employees, but because this is a policy which specializes in data breaches, it covers a data breach by an employee.
And also, is it possible for an organization, for example, the case of Sony, as Manoj brought out, to claim an insurance premium, let's say if it hadn't detected breach for over 18 months, right? So what would your policy say in general, let's say not in specific policies?
Okay.
How would it cover?
Yeah, so that's a very interesting thing, and so typically a policy, any policy of insurance, I mean starting with a motor car policy with which all of us are very familiar, and coming to the cyber policy, which is what we are discussing today, any policy typically covers incidents and the consequences of incidents after the policy has been bought. So you can't normally cover an incident which has happened earlier for which you buy a policy today. But the market is a supply and demand market, and there are situations where an incident may have happened earlier, but the client is unaware of any incident that may have happened. So the client in a very bona fide way comes to the insurer and says, I want to buy cyber liability insurance, I understand what benefits it will give me, but rather than covering me for incidents that are going to start effective the date of my policy, please cover me for any incidents that may have happened. I do not have knowledge of those. That's a declaration I'm making to you. So on that declaration, you can cover incidents that go back to a date. Okay. So that's a thing which is now becoming prevalent in the market.
Manoj, would you like to add to this?
Yeah, I completely agree with Sushant. Look, the retroactive dates are not very important for these kinds of policies, because if you have retroactive dates in the policies, please remove it, because this is a discovery basis policy. Whenever the incident is discovered, at that point of time, the policy should trigger sufficiently to pay off all the claims.
All right. And so, okay. Yeah. I think we still have some time. Yes. And from a policy perspective, so Deepak, question to you. So what role does an organization information security or a privacy policy have to play in this context of cyber insurance adoption? And do you at any stage recommend the organizations to undergo revision for their privacy policy, because so that it covers all the cyber related aspects?
So definitely yes is the answer in very simple terms, right? Privacy is a very big aspect of overall information security itself nowadays. Revision of policies, again, definitely yes. At least annual review, if not a 6-monthly review, is something which is defined by most standards, right? So it's given. What we do work with organizations also is to see if every new process that comes in, if every new policy change at an organization level, every new way the organization works, right? For every such new act or set of processes, right? You see the impact from a cyber angle, from a cyber incident, probable cyber incident angle, from a cyber insurance angle. That is very critical. So every such new process that you roll out, right? It could be a HR process. It could be you opening up new ACs, for example, right? In the technology that you're using, right? And the target breach happened primarily because a vendor on the HVAC system, failed. So everything is important. There is nothing that is saying that this is data, this is technology, therefore IT team will do. It is not limited to that. Every aspect of the company could potentially lead to a cyber incident, and therefore that is what we work with companies to do, to get that maturity into their process. Yeah.
And how does your organization work with the information security team of the organization undergoing cyber insurance? And how do you aggregate the systematic risk and the residual risk to come up with an overall framework for the organization?
Right. So technology is a very it's a double-edged sword. While you would like technology to have controls, right, so that human intervention and the related risks come down, it also means that once the technology is so-called hacked, it basically opens up everything, right? So you don't want too much dependence on that also. So information security from a technology perspective is one of the significant areas of work, right, where you strengthen or harden your systems to ensure that breaches don't happen. But the other aspect of it is working with people and working with people across levels. So probably the biggest value add I would give to an IT department when I go to a client is help them educate their leaders, right, and get better budgets, saying that it's not only about end perimeter security or end user security. It's about culturally changing an organization where they start being more sensitive to cyber risks, and that helps companies reduce that residual risk which they have, right, and thereby impact on the insurance policies that they look for, or have more precise insurance policies which actually address their needs rather than having generic insurance policies which may not address their needs.
Manoj, any point you would like to add to that aspect on?
So, if you look into the information security policy, which is like which I say that unless you have a collaborative intelligence, these policies won't give much of the intended result. So, say that the CISO will be framing up a policy without understanding what kind of vendors and what kind of say interfaces are allowed in the system. So it is a collaborative process. We were talking about bring your own devices. If the CISO is not aware of that possibility which is there, to what extent it can be used your devices, and when the employees leave the organization, what are the kinds of controls over that they bring on your devices, the personal devices. I have seen very, very live cases in some of these incidents. When we get into it, the vendors and the employees are the biggest vulnerabilities in this entire breaches, because they might be the biggest strengths of the companies, but unless if they are fully educated on the information security piece, whatever technology and whatever process which is drawn out, which is there in the organization, it won't help. So it is a collaborative intelligence, because all the people sit together and first understand what kind of data which is there, what kind of vendors, what kind of interfaces, and how the data flows in the system, and how the data is allowed to the outside parties. Then you structure a framework, and then make sure that that framework which is completely adhered and checked at various points of times. Then you will be able to finalize that, what is the residual risk. That is where the insurance policies will come into being. And insurance policies are never the first level of defense in any case, because be it on the property side, be it on the PI side, insurance is always a third level defense. So if you bring the insurance to the first level defense, soon you will run out the insurance partners in the market, or your cost of insurance, the economic cost of insurance, will be at par with your compliance cost. So that's where, which is the long run, which will happen. So that's my take on this.
All right, so in interest of time, before we move to the audience for question, one last question to the panelist. Let's say an organization has detected it had undergone cyber incidents and cyber breaches. So what is the usual course of action, and how do they initiate the cyber insurance claims for that matter? So does an organization approach companies like Tata AIG, or do they come to their brokers for help, and how does it happen?
There are two kinds of claims which is happening in the under cyber insurance policies. One is the kind of insurance companies who have got the sufficient infrastructure in place. The second one, which the clients have decided not to have that infrastructures, because many companies won't allow the external parties to get into their network, which they have their own, the infrastructure or incident report plan in place. So if the first one, if I take, so the insurance companies will be having a toll-free number to lodge a claim, which will be going to the insurance company's infrastructure, to the lawyers. In turn, they will call in the forensic guys. Brokers will be informed, and obviously brokers will be advising the client and will be coordinating with the insurance companies. The second level, which is a simple notification under the policy, and the client will using the infrastructure which is at their disposal, which they are comfortably, they have the comfort, sufficient comfort with those service providers, and the policy will pay as and when these service providers raise their invoice. So that is where it is. And broker is an intermediary who will be giving sufficient advice. The broker's most important role, structure the policy according to the requirement, and when there is a claim, which advise properly that look what are the do's and don'ts under the policies.
So Sushant, your perspective will be helpful on this.
I think squarely answered. Data breaches are not known immediately, after they happen. So there's an element of time that goes past typically. And even when you suspect something has happened, you're not sure whether it has actually happened or what has happened. So I think when you first have your suspicion, you go to a forensic expert. So that's the first thing you do. If you are insured, you can go to your insurer and tell them that, look, I suspect something has happened and I need to have forensics for that. The insurer says yes, indeed, because the insurer is aware that if it is not plugged immediately, there's going to be more data liability, which again is going to go out of the policy monies. So the insurer says yes, let's go hire the best forensic expert to find out what has happened, if anything, and to plug it.
Do you have your own forensic experts, or do the organizations have to engage their own forensic experts for this exercise?
No, so we don't have the capability in-house within Tata AIG, but we have tie-ups with the best forensic experts in the business, KPMG being one. And we also, it's open to the client, so that if the client wants to have a forensic company which is, of their choice, or they have had dealings with in the past, that's pretty okay. So that's, if I may just complete, so forensics is where it starts off. Then if data breach is established, if you have notification laws in, you're bound to notify, then the costs for notification start being incurred. Credit monitoring, if it is financially sensitive information which has gone out, so that is a cost that gets incurred. And finally, the last piece which remains to play out is the liability. So if records have gone out, and then typically courts or regulators or even in class action suits will say $1,000 a person whose record is data subject or something is what you have to pay. So it comes in stages. It starts with forensics, then very quickly moves on to notification and to credit monitoring, and finally to the liability part. And that's how,
Legal and brand protection also through the...
Yeah, very good point actually. So there is, the policies have specific, provisions for protecting the reputation of not only of the company, which is the policy holder, but also of the CISO, CIO, the directors, because a lot of times it could be reflecting on them professionally, and therefore you need to hire consultants to protect your image. That's a cost that gets taken up very early on, and that's also picked up.
Right. So, and Deepak, from a forensics viewpoint, what sort of an exercise, you don't have to go in detail, but what sort of forensic exercise do you undertake? What sort of evidence preservations is undertaken, and what role does legal experts, have to play in this overall exercise once you know that a breach has happened?
Right. So very briefly, most of these are extremely confidential engagements, right? So we have a set of tools. We have a set of experts who are good at going in from a technology perspective. We also have a set of experts who are good at looking at the people aspects of it, right? So when you deal with an individual who has created a breach, and he was talking about whether it's a CISO's, where does the buck stop and who are causing it, you need a lot of people aspects to it, which have to be done very sensitively in a very completely different manner. It's not technology forensics there, it's people forensics. We have teams for that also. Once that gets done, then the breach is addressed. Then we do the entire brand protection, communication, your HR internal communication. Your people are, again, very important. Your external stakeholders are very important. Your vendor management, the entire brand protection kicks in. So these are where we come in. There is the legal aspect to it, right? KPMG does not do the legal thing, but most consultants, they'll have legal consultants, which we also tie up with, who would come in advising us on how to address the legal aspects of this. And this is primarily the first set of steps. Identify what, like Sushant, identify what the issue is or what the event is. Identify the stakeholders, map those stakeholders, make sure you're in sync with them, and then take it out and give it to the other people.
Right. And now I think it's time for Q&A from the audience. Anyone that has question, please raise your hand. Can someone please mic? Yeah. So please identify yourself for the record purposes.
This is Mohan from IBM. Though I am not from insurance field, I just would like to know what is the current share of cyber insurance today and where it is heading within the next 5 years. And the another question is, as a consequence of cyber incidents, if any loss to human resource, is that covered?
So I think, Manoj, would you like to answer?
Globally current, if you look into the market premium, last year which has clocked in close to $2 billion globally. It is expected to grow at 35% this year. So we are expecting somewhere $2.75 billion. That is less than 1% of the total property and casualty premium globally. So that is where currently, if you look into the Indian market, which is like a 90,000 crore, which is the property and casualty premium. So current year, the market is expected to clock somewhere close to 60 crore cyber liability on the outer side. If whatever the plans, if the PSUs and other companies have got in along with the private players, it is 60 crore. Out of 90,000 crore, it will be 60 crore. So that's where the market which is there at this point of time. And where it will be growing, which I am telling the looker, which I have already told you, the global market is growing at 35% rate, when the property and casualty, which is globally growing at in 1% or 2%. So the potential to grow is much higher. In India, this is one of the most successful liability products, which has almost doubled the premium in last 12 months. So the potential to grow is very high. At this point of time, the premium figures are very, very low. The bodily injury property damage part, which is an exclusion under the current liability policies, current cyber liability policies. Obviously, there are policies in the market, very few markets. I can identify 5 or 6 markets at this point of time, right? The property damage and bodily injury. That makes it very complicated. 3 of them are excess markets, 2 primary markets are there. But that is the need at this point of time. If you look into some of the targeted attacks, which they are targeting the PLCs, which are controlling the biggest manufacturing facilities in the world, which they change the parameters of a power transmission company, and that leads to huge fire, and the fallout is a huge say property damage, which is at this point of time it is not covered under the traditional policies, neither under the existing cyber policy. That's where it will be, the development will be happening. At this point of time, $300 million capacity is available for such an exposure. But that in the coming years, you would be seeing more markets putting more capacity into that exposure. That is required. Which I was talking about the $1 billion, which is the policy is going to sit on top of the mega policy with a drop in down clause, which is called the DIC clause technically, which the mega policies won't respond to such kind of a incident because there is an exclusion. Even with the best markets, there is an exclusion. When that exclusion plays out, the cyber liability policy, which sits on excess of the mega policy, will drop down and pick it up the exposure, the risk.
Hey, I'm Rajinder from HCL. I'm supporting the BFSI clients of HCL. Question is on two questions. One is if a customer has signed up with the third-party cloud provider all the IRs, SARs, PAS, then how would insurance be covered by those, various business outages when it is either hacked or it is, DDoS or whatever happens to the customer applications. The second one is on if per se, say maybe Tata or Aeon, if Sony were their client and if you realize Sony has been, it's a day one of hack, then will you join the war room of Sony to contain or mitigate the liability on you, or would you wait for the final bill to be brought on to you?
Let me take the first question that look at cloud. The cloud exposure can be mitigated two ways. The first and foremost, which is advisable, is a contracting practice, best contracting practice which you are putting in place, because cloud is to be understood very closely. What kind of cloud, what kind of portability, what kind of privacy, what kind of the systems and process in place for them. Even if it is not there, if you are the customer and you are hosting some of your data, the customer's data on the cloud, you are vicariously liable. So your cyber liability policy will trigger and pay off all your liabilities. And obviously the underwriters will get a subrogation right against the cloud service provider. If they are negligent, the underwriters, the insurance companies can go after them. But the best thing which I advise you is, like, in the first place, under the contract, which you need to have a limitation of liability or indemnity provision sufficiently built into the contract, so that, look, if the cloud service provider's negligence leads to any loss which is coming on you, which will be addressed in the first place. If it is not there, then also the insurance policies will pick up the part. The second point which you asked about, that look, any incident, which is the first hour, is the golden hour. So you have to have a very, very proactive response mechanism in place. That's where the insurance companies will be much interested. So the insurance companies will allow the insured to access the best service providers in place and reimburse their cost, or the insurance companies will use whatever service providers which they have at their own disposal. They won't wait for the fallout of the action. They will work with the insured and make sure that, look, the risk is mitigated to the fullest extent. Deepak, you could.
So I'll just add to a little bit of both. The cloud angle to it, right? It is just like your vendor or your customer is passing on the buck to you. You choose to pass it on or not, depending on the size of the vendor who's putting and what kind of a muscle you have with them, right? Therefore, it can be a contractual term, right? It can also be that you're just saying he's too small, right? And I want to protect him. It's a call which each company will take, right? So, but across the value chain, people will have to pay up for some part of the loss, and it's a better way that way, right? So that everybody take a little bit of it. So from the cloud perspective, it's completely on your relationship with your cloud service provider and the clauses that you've contracted on, like Manoj had mentioned. With respect to the response in terms of an incident, it depends again on the policy, the process that you have set up, right? So you have a war room. You choose to allow people into that war room or not allow people into the war room. If you do choose to allow either an external consultant or your insurer into the war room, the assumption is that the relationship is such that they will come in, right? Because they also want to help to minimize the liability or the losses possible, right? And how you do it are all set of processes that happen. Today, I know of clients who have war rooms basically on their WhatsApp messages, right? They have a WhatsApp group for war room. Any incident, they just message it there. Instantaneously, everybody give their approval. It was no more of all of you getting to one room and actually having a discussion on points. Data is moving much faster today, right? And we could, as consultants, be a part of that group, right? And therefore, we are online from the instant one. When you get to know of it, in that group, we also get to know of it. And our inputs also come in just like anybody else's input, right? So it completely depends on how you set it up, right? But yes, if you do call an external consultant or your insurance as a partner into that war room, they already have established a relationship where we will be there, right? That's what the relationship is about. So it is almost a given that that will happen, yeah.
Yes, please, Sushant, please.
And when you're making the assumption that you will invite the insurer into the war room, the insurer would be ready to come. You also have to be sure that the insurer is going to come in and add value. So I think when it comes to policy contracts, you can get the best contract, But if the insurer who's the other party in the contract, you have one party as the insured and there's the insurer who's the other party. If the other party does not have the experience or the expertise to really, assist you in that golden hour, then the policy will be reduced and the promise will be reduced to a payment of monies as and when, you claim it. That's an important aspect. Far too much attention is paid by every client on getting the best policy wording, very limited exclusions, very wide coverage, very low premium. But precious little attention is paid in getting the right underwriter. So you need to figure out the right underwriter for that. Somebody who has the expertise and experience.
Hey, hi, I'm Rishi. I'm responsible for information security at Target. Going with the existing trend of two questions, I have my set of two. One, you spoke about preventive measures, your response strategy, and thus the residual risk is what you insure. Given the fact that both preventive and the response measures are no longer static, these are changing day on day, no matter whether you review it every 6 months or whatever time frame, these are changing, right? And thus, how do you really define, or what is the approach to defining the residual risk? How do you box it? That is part A of the question. Part B, first from an industry perspective, we've been talking about breaches and it is more corporate, it is guest data and stuff like that, right? At an individual level as well, do you see the industry moving at some point in time to provide individual cyber liability coverage? You spoke about cyber bullying, right? That is possibly an example. But today, a lot of us are vulnerable to cyber risk, not just as an organization, but individually as well. So is that also a direction from an industry point of view?
I'll take the first one. Yeah, the second one I'll leave to the insurance guys to comment on, right? The first one was about residual risk and how do you actually go about it. Like I'd mentioned a little earlier, and now using this opportunity to emphasize on the point, every action that the company takes, right, has to be looked at from a cyber risk aspect, right? You did mention your company, I did mention the example before. Typically, that HVAC system would not have been looked at. So we are also evolving. It's not like I knew of looking at HVAC systems before, right? You learn from your mistakes, right? And or others' mistakes, and you gain from that. What we do need to work on, and what we are very clear, at least as KPMG, is that you need to work on the culture of the organization, right from the top to the bottom, make people cyber sensitive, right? And that would lead to the second part of your question, though I'm not talking about the insurance part of it, wherein is the person using that equipment on the internet, right, being responsible about it? And they define responsibility differently for their individual self and differently for what the company expects, right? So from an organization, you will define what the company expects, right? So we have policies saying, do not post these things on the internet, right? We give you access, but please do not share this information, right? And this should become part of culture. It should not be a training program where I take it like once in 6 months or a year. It should be a continuous communication which changes the way you think, right? And it should come right from the top till the bottom, everybody, which means if I had set up an HVAC system, the admin guy who's signing that contract is already thinking about what is the cyber aspect of it, rather than saying, I'm only going to look at the HVAC's, configuration and details of that. So that is very important, right? And once you do that, right, this residual risk will come down because it's a part of your culture, right? And it will help the individuals also eventually if everyone start doing it. The second part of the question, I'll let the insurance experts know.
Yeah. The personal cyber liability insurance, which was launched by an Indian company in 2014. So I'll say that, look, they were ahead of the time, but at this point of time, they are thinking about it, bringing it as an affinity program along with their personal offerings. So it is there very much on the card, and very soon, which you will see, because that company is very much known for the affinity programs, and where they will patch, I will say, bolt on to their all personal products. There's a cyber liability policy.
Sushant, would you add before we close? Okay. Suhaan?
The comment on, I think any insurance which is linked to security has to be dynamic, because security is a dynamic concept. So it cannot be a static direction in a sense, and I think that's where it's a matter of principles and culture which was being spoken about by Deepak. So I think that is what you'll have to see reflected in your policy. The question is whether you can be measured, because it has to be something that's measurable. You know, so your performance under that will have to be able to be measured, you know, in that sense. So actually the onus is higher on in a dynamic space than that in which everything remains static, you know.
All right, so we have run out of time. I would like to thank all my esteemed panelists for a wonderful interaction. I hope it was useful for you, and I will we'll make sure that we take this discussion forward. We'll extract the key discussion points, and then we'll make it sort of in a cycle where we circulate it back among the audience on what was discussed, so that we can have reviews on it as well. So our panelists will be available today as well as 2 days, going after 2 days as well on 16 and 17, so you may interact with them. With that, I would like to thank everyone. Thank you for this session, and I do hope that you join us for the next one, which is the Innovation Box, wherein wherein all the new security product companies will showcase their offerings, and then audience will have a chance to vote the best product company and stuff. So thank you everyone.